Hello, everyone, and welcome back to the Financial Podcast with me, Olivia. Today, we're diving deep into the recent financial performance of MongoDB, ticker symbol MDB, a company that has certainly been making headlines. After what some might call a period of transition blues, MongoDB has delivered some truly eye-catching results for its first quarter of fiscal year 2026, causing its shares to surge in after-hours trading. The software company reported earnings per share of $1, which absolutely smashed analysts' consensus estimate of 66 cents per share. This significant beat on the bottom line is a clear indicator of strong operational performance. Beyond just the earnings per share, MongoDB's revenue also demonstrated impressive growth, hitting $549.01 million, which represents a substantial 21.9% increase year over year. This figure also comfortably exceeded analysts' expectations, who had projected revenue around $528.12 million. Such strong top-line growth, especially in the context of recent market sentiment, underscores the company's robust market position and demand for its offerings. Adding to the positive narrative, MongoDB achieved better than expected profit margins and recorded the highest number of net new customer additions in the past 6 years. The company successfully added 2,600 new customers in the first quarter, bringing its total customer base to over 57,100 by the end of April 2025. This surge in new customers signals robust acquisition momentum and broad appeal across different segments of the market. Interestingly, MongoDB is observing strong demand from both large enterprises and emerging startups. This diverse customer base indicates the versatility of MongoDB's platform, as businesses are increasingly choosing it to modernize their older systems and to build innovative new applications from the ground up. The flexibility and scalability of their NoSQL database make it a preferred choice for modern applications that are often cloud-native, distributed, and real-time. Looking at the profitability deeper, while the company reported a GAAP net loss of $37.6 million, or 46 cents per share, its non-GAAP net income soared to $86.3 million, or $1 per share. This is a significant turnaround when compared to a non-GAAP net loss of $47.7 million, or 51 cents per share, in the same period last year. This shift indicates a substantial improvement in profitability and effective cost management as the business scales, even as the gross margin saw a slight decline from 73% to 71% on a GAAP basis and 75% to 74% on a non-GAAP basis year over year. Furthermore, the company's financial health is evident in its cash flow generation. MongoDB generated a healthy $109.9 million in operating cash flow and $105.9 million in free cash flow during the quarter. This represents a notable increase in free cash flow from $61 million in the year-ago period. As of April 30th, 2025, MongoDB also maintains a very strong cash position, holding $2.5 billion in cash, cash equivalents, short-term investments, and restricted cash. Turning our attention to the future, management's guidance for the upcoming quarters and the full fiscal year 2026 has also thrilled investors. For the second quarter of fiscal year 2026, MongoDB anticipates revenue to fall within the range of $548 million to $553 million. This guidance is largely in line with or slightly above analysts' previous expectations of $549.3 million. Additionally, the company projects adjusted earnings per share for Q2 2026 to be between 62 cents and 66 cents, which surpasses the analyst's earlier expectation of 58 cents. For the full fiscal year 2026, MongoDB forecasts total revenue between $2.25 billion and $2.29 billion. The non-GAAP net income per share for the full year is expected to be in the range of $2.94 to $3.12. This forward guidance implies continued, albeit moderate growth, despite previous concerns about top-line deceleration. Now, let's discuss how Wall Street views MDB stock following these developments. Prior to this earnings report, the stock had been under some pressure, down close to 20% year to date, primarily due to a conservative fiscal year 2026 outlook that highlighted a potential deceleration in top-line growth and significant investment-heavy operating plans. Management had even referred to FY26 as a transition year, which had made high multiple investors nervous. Concerns also lingered about the flattening of Atlas workload growth and lengthening large enterprise deal cycles. However, heading into this earnings report, shares had staged a modest recovery, climbing roughly 13% over the past month. The strong Q1 results appeared to be shaking off some of those transition blues. Wall Street analysts currently hold a moderate buy consensus rating on MDB stock based on ratings from multiple firms over the past 3 months. Specifically, TipRanks indicates 21 buys, 8 holds, and 0 sells. MarketBeat, drawing on 33 analysts, reports 23 buy ratings, 9 hold ratings, and 1 strong buy rating with no sell ratings, also confirming a moderate buy consensus. The average price target for MDB stock, according to TipRanks, is $256.31 per share, which implies an upside potential of 28.1% from its recent closing price. MarketBeat's consensus price target is even higher, at $286.88, suggesting a more substantial 43.63% upside from the current price of $199.73 as of June 4th, 2025. It's important to note that these estimates are likely to change as analysts update their models following today's robust earnings report. The highest price target among analysts is $430, while the lowest is $160. Beyond the financial figures, MongoDB has made significant strategic moves. A key development is the expansion of its share repurchase program. The company announced an additional $800 million share repurchase authorization, bringing the total buyback authorization to a substantial $1 billion when combined with the previous $200 million announcement. This sizable buyback represents approximately 5% of MongoDB's market capitalization and signals strong confidence for management in the company's long-term prospects and its ability to generate significant cash flow. MongoDB is also strategically reorienting its go-to-market strategy to heavily focus on Gen AI native use cases, vector search, and automatic data embeddings. These initiatives are crucial as the company aims to capitalize on the burgeoning demand for databases that can effectively support artificial intelligence-powered applications. The company's modern architecture is particularly advantageous for the types of applications being built today, which are increasingly cloud-native, distributed, and real-time, and crucially, for the AI-powered applications of tomorrow. In line with this AI push, MongoDB's Voyage AI recently released 2 new retrieval models, Voyage 3.5 and Voyage 3.5 Lite. These models offer improved retrieval quality and price performance over previous iterations, empowering organizations to build more trustworthy and accurate AI applications. Additionally, the MongoDB Model Context Protocol, or MCP server, was launched in public preview. This innovative server connects MongoDB deployments to various MCP-supported clients such as Windsurf, Cursor, GitHub Copilot and Visual Studio Code, and Anthropic's Claude. This connectivity makes it significantly easier for developers to interact with data using natural language and perform database operations seamlessly with their preferred agentic AI tools, assistants, and platforms. On the leadership front, MongoDB recently appointed Mike Berry as its new Chief Financial Officer in April 2025. Mike Berry brings over 30 years of experience in technology and software, with a proven track record of driving profitable growth. This strategic hire further strengthens the executive team as the company navigates its growth trajectory. Despite these significant positives, it's also important for investors to consider some of the bearish signals that have been highlighted. While the first quarter's non-GAAP earnings per share were strong, the company did report a GAAP net loss. Some analyses pointed to a negative earnings per share of minus $0.19, missing consensus estimates significantly, and a forecasted negative EPS of negative $1.78 for the current year, raising concerns about consistent GAAP profitability. The company also reported a negative net margin of 10.46%, indicating that it has been spending more than it earns, and a high price-to-earnings ratio of negative $68.29, suggesting it is not generating profits relative to its stock price. Furthermore, recent insider trading activity has shown some mixed signals. While executives are actively managing their holdings, there have been notable insider sales, including significant transactions by the CEO and CFO, which some might interpret as a lack of confidence in the stock's short-term performance. However, the increased share repurchase authorization does seem to contradict this, suggesting management's confidence in the long-term value of the stock. In summary, MongoDB Inc. operates as a global provider of a general-purpose database platform, offering solutions like MongoDB Atlas, Enterprise Advanced, and the free Community Server, along with professional services. The company positions itself as a unified, intelligent data platform built for the next generation of applications, and it is recognized as the most widely available, globally distributed database in the market. With millions of developers and over 50,000 customers, including 70% of the Fortune 100, MongoDB is clearly a critical player in helping organizations innovate faster and simplify complex architectures. The strong first quarter performance, driven by Atlas growth and significant customer additions, coupled with optimistic guidance and a substantial share repurchase program, certainly paints a more positive picture for MongoDB than the transition year narrative previously suggested. The strategic pivot towards AI-native use cases further solidifies its position for future growth. While challenges such as GAAP profitability and gross margin slight declines persist, the company's strong cash flow and market positioning suggest resilience and potential for continued profitable growth in the dynamic database market. That's all for today's deep dive into MongoDB's latest financial results. Thank you for tuning in to the Financial Podcast. We hope this comprehensive overview helps you in your investment decisions. Don't forget to like and subscribe for more insightful financial analysis. We'll see you next time.